Good morning. It's 9 o'clock. Cash open, and this is Tuesday, August the 13th and this is the Bund session. You see that I added a additional long level. It's taken from the pre-market. This is the 177.64. This level is very important and also at the same important as the levels 54 and also the 45. The pre-market is already strong with some appearance of other time frame traders, and right now we are at the pre-market VPOC. I think you've all read my preparation and my hypos today, so I'm not gonna talk too long as I don't wanna waste time, and we're about to be in a trend situation and about to trade also. So that means take care now. What we wanna see is that we build value above the high volume edge of 73. That means we build value in increasing volume. Either we stay then with some wedge consolidation, or if we see a lot of volume taken out this level and the high, we want to see the pullback with absorption and then re-increase of volume. This is our trigger then, where we want to go in. Or if there's a wedge consolidation with a clear structure where we're looking for a micro balanced wedge consolidation for a cheap entry. So nothing to do until we reach this level. Or if we reach and see in responsive buying at the 64 level, I will look for the range long with additional targets. The same thing on the downside. And also beware, we're at the all-time high. That means if we see now the open drive or the open test drive, that means that we first testing the 64 level before getting into the 76. Remember, if we take out the high and then say a decrease of volume and we see rejection, that means buying is not about to continue but got rejected by bigger OTF sellers. This is then our open rejection reverse. Very important. We're in a bullish scenario and we're very good bullish standing above yesterday value high. What we then not want to see is at the open high and above rejection by sellers. This would mean that all the people who already got into the longs their positions are in danger. So right now we're just waiting. We have some economic numbers today, so we can expect normally a normal volatility market in terms of speed and volume. So be careful with the long. We have no increase of volume yet. You see that? As we're reaching the top area, we're building at least some value, but we haven't not seen the increase of volume. That means right now there is no overconfident buying. Also no blocking. That means I would wait then for a second attempt and a rejection for go into the open drive reverse. So a rejection in the tape, in the order book, and trying to get then cheap in at the 74 level, 75. Or if we see absorption now, an increase of volume, that would mean that we can look for the long. So unfortunately, book is kind of thin. That means that the short just was the longs was just taken out from the books, and there was no pullback situation. That means the moment when I was talking that we will look for the rejection, which obviously happened here in this candle at 9 o'clock and 8, exactly at 9 o'clock 7 and 48 seconds to 9 o'clock 8 and 20 seconds, one needed to get into it here, but this is no cheap price level. As we only have a very small open range, that means this is only a 3-tick opportunity, which not makes me happy for saying this is a good risk reward trade. So it would be better in this kind of visualization. It would have been better if price is trying to get above, extend, and see the rejection. Then you have some good trade. So no problem here. In my case, no trade. I stayed flat because the signs didn't appear at the level where I want to enter cheap, and there wasn't also a pullback situation for a cheap entry. So everything okay. We do remember our activity levels are then staying in control, and what we want to see then is the next zone again. Maybe they try it another time and we want to see the same behavior here, or we going back to the next activity level around the 64, 65, and we will wait here for a responsive buying. If we see a initiative sellers around this level here, we of course not gonna go then for the range long. And on the other side, there is this next level about 54. Right now, they bulls it's still staying in control. You see it like I said, this is no good risk reward if you entered in here at the 73 and only have this 70 target number one. This is very wedge and very tight. So it's better to wait for better risk reward and going back to this volume edge here and see the behavior of the markets. Right now they do absorb already at this volume edge from the pre-market. So let's see if we can stay alive in this bullish scenario. We want to see that then they build value here, and we want to see an increase of volume as we go into the high. Not like here, where we see a decrease of buying volume and even people starting to sell. This is no signs of strength. All right, let's wait. So price is about to advertisers for lower areas. That means they looking for acceptance and then responsive buying at this area of 64, 65. So this is very important now. As the delta structure, we can see some people leaving their longs and also some sellers. And as you know, if you follow my stream, you know that I then look for a kind of double rejection here as a sign for responsive buying. Important is that just delta shows us that the selling volume, once we touch the 64, 65 area, is not starting to increase, which would mean that we have initiative sellers at the edge. This would not be so good. But if you follow me, you already know what I'm looking for at this rejection and at the delta. And I will tell you then live, we can spot this kind of rejection kind of easily, quite of easily. But we haven't not yet reached this area. As Bund is normally a really consequent at a certain level tick down market, that means it really tries to play this level and not starting to stop before. We can wait now for this scenario to appear, and will not be getting and looking for this signs of rejection before entering this activity level. So we now testing the activity level So that means overnight high at 63 and this volume edge at the 64, 65. What we now want to see, we spot the responsive bias. That means we already have a small rejection. That means there was only less selling. Some people took out. We want to see a double test, another test of the low, and then want to see that people either absorb or switching to active buying. So this is what we want to see, and then we will look for a cheap entry around this area. Stop is then around the 62 in my case. But first we want to see the responsive bias. So we have the second test now of the low, and now around this area here we want to see now again delta coming in, no increase of sell volume, that will mean no long, but if we see the new bias coming in now at this area with the stop at the 62, we try now to get in when we see the responsive buying. And we wait for this, patient with the right attitude. This is important because we don't want to force this emotion. Target 1 would be then the 70, at the moment POC, and target 2 would be the volume edge area around starting at 2073. So there are the bias. Now we're in the phase of we let the trade unfold, or either unfold or we get stepped out before not the impulse phase 1 has started. That means before we not see that they take out the high of the microstructure with again increasing buying, the trade haven't unfolded. So that means in this moment I don't do anything with my play system. I just wait for this impulse phase 1 started. And if this impulse phase started, I start a adaptive stop handling. That means, as you know, when you follow me, I pull it a little bit closer with impulse phase 1, and with impulse phase 2, that means a second wave and a second attempt of buyers trying to get out of and pull out the numbers higher. So we have now impulse phase 1. That means now I do pull my stop a little bit closer. That means at the level of 64. And I wait now that they reach with a second impulse phase the POC level, and this is then the moment when I pull my stop even closer to the entry level here around. And again, target area number 1 is around this POC, and target area number 2 is around here. If you're trading more positions, remember, we are still in this bullish situation from the big picture preparation. You also have the chance then, you never know, if OTF decide to get into the market and push it really hard at the top, you then also have a very cheap entry for a trend trade. This is also very important to know. Now we see impulse phase 1. That means trade is now about to hit the POC. As we know that a sign of weaknesses would be that when they push it really hard now on the sell side without reaching even the target 1 area, that means we don't want to see prices now going below my entry area. That means we avoid now getting stopped out with a lot of 4 ticks or 5 ticks. That means my initial stop was at the 62. I pull it now closer. That means if I got stopped out now, I'm only paying my fees for this trade. So that means a 0 to -1, -2 tick trade. But the trade yet is still alive because the range player still trying it to stay alive. That means you see a little bit again increase buying volume appeared. That means they trying it another time. If they fail now, you know our stop supports us. So you don't have to do anything right now. Just let the market decide if you get paid here or you get a little tiny minus, because this is a lucrative trade, and no worry about if this is then a minus. And if you're a little bit worried then and have fear or feeling some pain of a lose, accept this. It's okay. It's your old behavior patterns just trying to protect you of a loss, because your survival brain can't make the difference between this is a serious danger of some tiger wanna eat you in the channel, or is it just a 20 bucks of losing money. So this is the funny thing. Your survival brain just can make the difference. So it's totally okay that you have this feeling, because this feeling trying to protect you. So let's wait for the trade working out either or getting stopped out on scratch. If you're now watching the speed of orders, we can compare it a little bit to yesterday. That means that is not the perfect day. That means even though I expected a little bit more normal speed of orders, normal volatility, it's still like yesterday. It's a little bit lazy and slow market. Well, that's the way it is. We cannot change it. That means you see it takes some time that trade can unfold. We're still seeing some people buying, but we also see absorption. That means we are right now in some kind of algo trading market already, which we normally used to see maybe at 10:30 or 11 or later. So that's the way it is. We cannot control this. So we are in this trade. We're waiting. Both sides can win. That means it's possible to get stopped out or to get a winner. Still everything possible, but it's a little bit weak and uncertain behavior. Participants don't drive it really, let's call it really hard to one or the other side. So let's see what happens. You see they fishing a little bit for liquidity, pulling lower and lower. I did not get stopped out yet. My stop it at the 65. That means around my entry area. And I keep on holding on to this trade because you see delta is still on our side. That means no matter what, even though the buyers got absorbed on the upside, that means some guy also trying to get into short right now here. It's you cannot make the decision who will win this. So I'm still in the trade, and I'm gonna let the stop decide, as I've seen now, adaptive to what happened yet, and seeing still that the internals, the delta is on my side. I will stay at minimum for my minimum target at the 71. This volume edge here, this divided profile. And well, that's the way it is. I know, of course, that if buying stops and we have this scenario of absorbing in the ask, that they cannot pay the ask so far, that it can go also then to the downside. But this doesn't matter. This is just emotional context. Will I not get paid for it? So you made a decision, you stay in the trade because this is your risk reward you calculated. So this is now the third attempt of the buyers. This time they could at least get again to the top area, which is the 70, and we also see people then also still selling here. I will pull now my stop to my entry level, which is the 66, 67, because now we have too much money in the books that is invested. And I think you will agree, nobody wants to see now going back to this bull proving area of the low of 55, 66 again. So that means I either got out now at the 0 level on scratch, or I get filled at my target area. And if you're trading then more positions, remember, we still have the chance, if they trying to push higher, if they want to take out the high, if they want to go again to this higher volume edge area, we still have, just technically statistical, the probability that you then have a very cheap entered long trade. So they're still buying. We see still some increase of volume here at the top. They also have to work with the rejection of some smaller buyers, of course, coming in here at the moment of epoch. So this is totally normal, and they need to take out, of course, the 70 to 71. And if they fail, then we have a good stop now at our entry level, 67, 66, which means we don't lose much money, but we're in a comfortable, cheap price enter situation for either the long of the range and also for possible trend trade. So it's just a very weak market. You see, it's very slow, and don't let you drive crazy and drive a fool by the market. It's just not the normal volatility you want to see. Everything is kind of running like very, very slow, but it's working. They trade, they stay in the book. The delta is not showing not the signs of the major weakness. So I don't change anything. I let the market decide with my stop and profit handling in this case. You can see then they also pull a little bit liquidity. This is on our side now, a little bit more strength. That means it's slow, but the bulls are staying alive. You see, when they're going back and testing, they're coming in again and buy. You see liquidity is a little bit pulled as well. So we don't know, but the internals, the bulls are still alive. And the other thing is that we are still having trouble to get over the POC. Normally, in a normal volatility market, that would mean it's a little bit weak and already signs of strength. But you see, in a lower, slower volatility market, that doesn't mean anything because they just try and you stay in the trade, and it just takes longer and longer. This is some kind of uncertainty. You have to live then with a trade in a lower, slower volatility, slower market. And now they tried it more aggressive, 143, also helping with passive liquidity, but they just cannot take out the high yet. It's still a trade, it's still not taken out the 70, and well, as long as bulls take in their pieces at this absorption level 66, 67, 68, everything is fine. If they don't want to take these pieces anymore, if they're not interested anymore, so then that's it. And that's what we're waiting for. So next activity level then would be the area around the 54. So that means if the bulls would fail to take out now the long and test the higher edge here around the 71, 72 area, then only if, I'm just telling you to be prepared then, the next activity level for me is then the area around the 54, because we had some bullish behavior, and this is our pre-market prepared next level where we're looking then for a initiative sellers or responsive buying. And we will see if market reacts to one or the other mark. If it's weak and it's very slow, we may not see touching or reaching this level, but you never know. And you see the next attempt here in this level, in this balanced area, that they are now at the top of this balanced, micro-balanced area and still grabbing on and taking on pieces. The bulls are still alive. And like I said yesterday, measuring success or failure, we take in the volume. And volume tells us to stay in this trade. Internals say to stay in this trade because we see still ongoing buying here. Of course there is pressure, of course there are the bears, they trying to protect us and using this, and it's a weak and slow market. Now we reach our target number 1, so that means now they took out. Now it's really, we reached the first target, and also target number 272 is only touched, okay, 72, 3, 4, 5 area. That means we will see now if bulls can stay in control, because from this major moment, leaving this balanced area, you're now remembering, please, if you have more positions, a second or third lot, you take in this lot number 2, this is your house money. You have your stop at your entry level around here, and you take in the next profits not before we're reaching this next volume edge from the 774 starting. 175. And then remember, if you're looking for a trend trade, doesn't matter that I'm not making a forecast that this will go into a trend trade. Absolutely not. We also have some bearish imbalance in the profile, but just for the statistic, even this works out maybe 1 out of 10 times. You're paid. Thinking of it, this is house money. You had the cheap entry, and if you're in a trade and this becomes a trend trade, and you will agree that this maybe at least happens 10%, 1 out of 10 times, then you have a very, very cheap enter here and have a possible a wonderful long move opportunity here, and be very cheap at the cheapest possible price from the 2-day cash value. So this is very, very nice. For other people who are not trading more contracts, now you have your target number 2. We reached now this area 74. I hope you took your second profits, you secured your second profit. And now for the guys who looking for just a trend play, don't be top tick Tony and enter here at the top. What we want to see is interest increasing buying volume as we take out the high, and then 2 entry plays possibilities for my place would be a holding structure with absorption signs confirming the willingness of bulls staying in control, or the pullback with no holding structure but just the pullback to this level after making maybe 4, 5, 6 ticks going back and staying in control means some little stick on the downside, boom, and rejection by buyers setting in again. This would also be a possible enter. And right now we are at the top area, and if we measure this whole scenario right now, means you see now some values already created on the upside, and you see that the sellers that came in was obviously some people who take profits, but also we see buying coming in here at 944. So now we take out the high. If you're in this position, you have your third lot, your third contract, you please hold it, because we now have the situation that maybe we get a trend. But for looking now for new buyers for the entry, I want to see now the pullback situation to this area where the bullish imbalance started. This is now a bullish control level, and we take this volume edge at the 75 and seeing as long as they stay at this level, we have a control by the bulls. So you're not in this trade if you not have 3 or more contracts and entered here, but new traders now waiting for this pullback scenario, because normally price always going back and testing an area, because this is then where we can see, can we be confident and take in new positions. And that's now what we wait for. Or as I said, if you're already in the trade and have more contracts, you just keep this trade. House money. All right, people, please think of it. We're now in the situation that some value is built at the top level. We haven't seen a test of the lower area. That means of the level where everything started. I always call this level where everything started. Everything started means where we see a initiative buying on a reasonable level. This is very important. If it's not a reasonable level, we don't give a fuck. Sorry for my words, but it's very important. It means this is our prepared level, and we want to see at the reasonable level here, either already, if we see already the absorption and you try now to enter here at this level 78, 79, that's totally okay, but you have to live then with the fact for my preparation, and my preparation is that you have to live then for a stop at the 74. That means if you enter now here at the 79, you have to live with a stop to the 74 level, means 5 ticks. This is not the world, but of course for a trend, that's totally okay. And if you want to be more conservative, you want to see maybe that they test the initiative buy control level again. This is this edge here from the 76 to 77. And get a cheap entry around here if we see absorption and increasing buy volume again. So 2 ways are possible. You could have entered right now here at this moment when I told you we see a holding structure, but you have to be aware now that your stop you have to be lived then with the stop 74. All right, our trade is working here. That means they taken out now the high again. We see an increase of buying volume already. They did even a test the low area. All the guys who have entered here the 79 with the stop at the 74, you can now pull your stop closer. I will pull the stop now at the 2 ticks below this level. It means to the 75 area. That means you have now a 4 tick stop, and you need to wait now to the trade to unfold. Remember, this is now our situation that the target number 1 of the possible trend was already reached, as it was more arranged than a trend trade with the play. But remember, if we see an increase of volume testing this area again and holding, you please stay in this trade. You've entered maybe here at the 79 level, and you got stopped out anyway with the 75 stop, and you have a high chance that the trade is done not working out anymore. But as long as this is not happening, we stay in this trade. This is a home run trade. We're at the all-time high area. We have no limitation on the upside. There's only the limitation by maybe signs of strengths of rejection. And by the way, so that means at the moment we see hypo number 1 with the range long, hypo number 2 if you stay in a range long, or getting in here with this holding structure and absorption and increased buy volume is also be played. So again, a day, wonderful, very good to learn. And also, by the way, to make money, like yesterday in Bund, is hypo 1 and hypo 2. So the preferred bullish hypos are played, and you see it almost hitting tick, almost exactly by tick. And if you stay with your plays and working out your abilities of bringing together the macro, the big and the small picture, you will be perfect prepared from the technical side. The other thing then is, as I guided you through this trade number 1, you see how many maybe emotional pain can unfold in while the trade is played. I mean, I talked to you, I showed you where is the danger, when to put the stop to close maybe. In this case, how I worked you through the trade. I can show you also my order here, that this worked out really good. If you're not getting too overexcited and feeling in danger once they didn't take out the long the first time. For me, it was not the reason to get out of the trade. I still had my stop closer at the 65, but not too close, because I have a clear rule for my trading and for my stop management after I was taken out of positions too many times earlier the month when I was still developing my stops. And I see now how better my trading becomes as I have rules and also some discretionary trading allowing adaptive stop handling, but also some kind of rules. So it's a little bit a mix of systematic and also from your stomach, from your belly feeling trading in the zone. But it's important to get aware of your emotions. And now as I'm talking to you, it's better for me because I'm getting aware of my emotions, and you can do the same way. So back to our trend trade. You see now they was not able to take out a trade, but again, no reason to be stopped out already here at this level, because remember, often if you analyze the Bund and the market of the trend plays, it's not the ultimate weakness signs if they cannot take the new created value. But as long as they say above the initiative buying from the initiative buyers from trend play, everything is still okay. That's why I said my stop is here at the 74-75 level and not beneath this overall created value, because they have the right to test this level, and we may see even some excess like yesterday and getting back in the game and holding and taking this as a holding structure. So this is not the sign yet that this scenario is over. So no matter if it's then over or not, this is, at least if you make your analysis of the market, this is not the sign that only that they put out some longs from the book. This is not the signs that the scenario is over. It's for me more than over if they take us the initiative buying level. This is the bulls control level. I call this the bulls control level. This is where everything started, and you see those levels are more of importance. This is the really important levels. So the bigger players don't give a fuck. Sorry, as long we stay in control, and they just fishing for liquidity, and so that's cool. The retailers are trying now, maybe try to get short already, and they use this people who got short to collect liquidity and stay in control. So don't let you fool by the market, and watch your emotions. Physical sensations and thoughts will make you your best trader you can become. Again, no reason for changing the stop here. It just takes its time. We're seeing the buyer staying in control. We're seeing they grab the pieces down here after some guys got maybe already into some shorts, but you see how they got in again. You see how they take in and buy again and buy their pieces. Okay, you now see they testing this area of separation between the old range market and the trender scenario. That means right now we're seeing still people buying here. We see they testing the low, but buyers coming back in. That means the scenario is alive. It's taken its time and you don't know, but it's still alive. It can unfold in both directions. But remember, we creating value, time measures, time brings some structure into this, and the volume still measuring that the scenario is alive. As long as they don't take out the low here with increasing short volume, or say it other, they take out the long means they do not absorb anymore. That means the bulls would not be interested in buying anymore. And you see also that the buying, or on the other side, no absorption, or the buying stops at this level, then well, that's it, and the trend trade is not staying alive. But till now, right now, it's still alive. You see, still at this lower area, they grabbing some pieces, they buying, and they just having they just don't unfold the trade yet. So that's totally normal. Sometimes it takes longer, but this is no sign of weakness. Sometimes it takes longer, and sometimes it's faster. But it's possible to unfold in both sides, and that's totally okay. That's totally okay. And if market pays us, that's okay. And if it's not paying us, then it's also okay. We go in for our place and we execute our trades. And if you're in your third position, remember, still my stop would be below this volume edge, this initial trading area around the 74.75 area. And then you got stopped out. But then you're still having made a lot of money. You made go 1, you made target 1, you made target 2, and with the third position, you only made a few ticks, maybe 7 or 8, but not the trend. So now no more absorption at this moment, and they trying to take out now this long at the 75. You maybe then got stopped out at 75 or the 74 level, because the bulls are not able to take control or not willing to take to stay in and say, no, that's not the cheap price what I want to pay anymore. And that means the responsive sellers from the longer time frame taking their chances and use this to get back into the value. All right. All right, now. So the third contract maybe then got stopped out if you followed my stop rule around the 74-75 area when the bulls could not hold this level anymore. So cheap entry around this area, there's 78, 79, stopped out there maybe here. And if you guys only took the trade with the pullback, so that means you don't have a trade with a paid house money starting with this range long, but traded the range long and now traded here the trend play, you then got maybe stopped out with 4 or 5 ticks. So that may hurt now. In my case, maybe it hurts because the first trade was not easy to manage as market was so weak, but you know, at the end you got paid, and now this hard-earned money makes some feeling like hard-earned money is now back at zero today because then market didn't pay you. So you know what? That's what we have to live for it. And maybe in this moment I will agree, and it's not so easy then to find the acceptance that in today the market then didn't pay you. But remember, if you manage this whole situation wrong today, you may got out here with a -1 or stopped out with 0, and then got a second trade and got stopped out with 4 out of 5. Then you have 5 or 6 ticks minus P&L today. At the end, I don't want to look you at the P&L, but want to see you how makes it this smart difference. This is a very small way, and the difference between making then some profits or 0, or on this day making 5, 6 ticks minus. It is very, very important to understand that only with the right mindset we could avoid today to lose money with this weak market, but our plays got played. And the important thing is, for me, having now a 0 at the P&L is better than having a -5 or 6. You will agree, because of a lousy trade management or not taking on our plays. Because remember, if you're not taking on trade number 1, even it was prepared and you have this play, but only taking number 2 because you were too anxious to take on, then now you have lost money. Or think of, you have take on trade number 1, manage it wrong, and have a 0 or -1, and now taking number 2 and market didn't pay you and have -4. Then you have -5 or 6. But if you stay to your system, means, in my case, taking on number 1 scenario, take on number 2 scenario with 1 lot and 1 position. Managing it good, staying with a good mindset and control, and make your profit from this trade. And now taking on executing your second trade and not getting paid, which means at the end you have 0. Isn't it better to stay in control and then at the end have 0 than having -5 or 6? That's very important, because you need to measure where you are able to make money with your how many. It's better to measure what your system, if it's working or if it's not, and therefore you have to execute every trade. And you have to develop your mindset. And this is the best thing, you execute everything and train your mindset. This is the situation the real market in life market gives you. And I think this was really nice to see today. And if you're an advantage to already handle more contracts with my plays today and my hypos, you of course made money no matter what. Because today, third position, you got about 8 ticks. First contract lot you got 4 ticks, the second you got 8 ticks, and the third you got 8 again. And so you see how good this then worked out. And but don't hurry. If you're only trading 1 lot yet, that's totally okay to make your training on your mindset. That's totally enough, and it's totally okay to take this as a basis. But this, again, to see here, that's the point one could have made today with this concept. Starting here at this level, you reached number 1 here, you reached number 2 here, you got stopped out with number 3 here. So I think this is quite a good trade from our hypo, and see in live traded how to handle and manage it. All right, after we see that they could not take on and stay in control the bulls, and as I told you, got stopped around this level here, that's auction theory. We have this balanced area, we see prices too expensive above the balanced area, and what's them happening now? As always, we have a 80% probability that we re-enter, then we hit the POC at target number 1, and also target number 2 is then the lower volume match at the 66, 67 right now. So this is the level then where we now again looking for responsive buying. Okay, so this is now again our activity level here, the area around 66, 67 from the cash market, and there's also from the pre-market, remember, the 40s, 64, 65. Right now we see development already prices ranges at 66, 67. So what we want to see now is the double rejection to look in again for the trade, for the long trade of through the range. But remember, we want to see the responsive buying double rejection and not want to see initiative selling into the low. If we see this, the initiative selling into the low, we're not going for the range long. So this is the first rejection. And remember, I'm always looking for the conservative entry for a second testing of the low like we had here. This was the first rejection, but then they get back again, and we see here the second rejection with this moment in delta. So I'm always looking for this place this way because I don't want to get trapped into a short-term not confirmed buy range long. So this is very important for me, and for me that worked out very good. And so there's only the first rejection signs here. If you're taking the more anticipating entry, you may have entered now with this first rejection here, but you have to be beware that they may test and come back, as most of the times they do. And then you have to lift that your stop still have to be 2 ticks below. That means at the 64. That means this is what you then have to accept. All right, guys. Um, Now we getting some confirmation that the range that is about to be built is very tight. This is no trading activity then, because trading this range from the low to the high without the spikes would mean a 2 3 ticks maximum reward, and the other side still. This is not the scalping number one market in Bund, and that's then too tight, this range. So I'm staying flat, and this is now the higher probability that we have seen our place already for today. And I think it was very good to train again, to train your mindset was very good to see how I handle my stop and my profit management and how to make money then with it. Today, with one lot, at least to not lose money, and with 2 or 3 targets from this trade number one would have made about 20 ticks today. And the most important thing is not to tell you how great this is, but it's more important to see. I want to show you how my brains react. I want to see, I just want you to make the same experience and get a little bit more aware of your emotion, thoughts, and physical sensations, and also seeing the impact that can have on your trading. Because I think that's the main goal, to see what is possible and to see how everything impacts. And big picture preparation was again, I think, very good, if I may say this today, because we touched our levels at the point, at the tick, very, very clear, and we see my play signs, the rejection signs, and also the increasing volume signs, and how you can work only with the delta and ask bit volume difference. Only with volume and delta, how you don't need any other indicators or what else. Keep it simple, but stay with it then, and train your mindset. All right, you see still nothing to do. This is the moves of today are already been traded, and we are now in a balanced market. Totally normal. Later the market after 10-15 hours here we see it's very weak. We're in a very tight range, and there's nothing happening. You see here again these principles of the auction theory, as Jim Dalton said it. Price advertises for all opportunities. In this case here, at this moment here, price advertises for higher areas. That means somebody said, hey, I say this is too cheap, I will buy here. You see this? Prices advertises. So time regulates. So this was not even a time regulation because it only took the duration was only 3.5 minutes. So, but at least time regulates a little bit. We stay at this level here, but then you see at this microstructure at the low where you normally want to see the bias like we had here, you see now people start to sell. That means volume at the third part of this formula, volumes measuring success or failure. And in this case here you see people starting now here to sell. See this here at 10 o'clock 37. I will spread it a little bit that you can see it. At this moment here in difference comparing to this situation where we are at the low measuring volume still staying alive, going back still staying a little bit alive, but then here at 10:37 before the chart structure, price structure was broken to the downside, you see already in delta number 3, volume measuring failure of success. So this purchase of advertising of price of higher areas above the edge is only regulated by time, but then volume measuring more probability for the failure. And what happens then normally in the auction theory is we going back into the range. So this is just an example for understanding again the auction theory. Not to trade because the risk reward is bad. We only have this 3-4 tick wide range. So this doesn't make any sense to me to trade this. And now we see difference in behaviors that we are trying to take out the low, which we did. We are at this area where we were from the beginning from the cash open. That means this is the lower volume edge from the cash market from today. There's 2 days volume profile at the 66 level. What we see is that they trying to take out or have taken out the low, at least about extended it 1 tick, and we see now the rejection and now testing the low again. You can go on the same thing. If you see now responsive buying and liquidity providing and responsive buying is coming in again as price testing the lows again, so that means the area starting at the 67, this is still cheap, you can go then for a long trade, but only if you want to see that the reward is not so good and you're okay with this. For me it's not okay because there's only then 1, 2, 3 ticks to the POC, and that means with the 4 tick stop normally I'm working what you need to give the space, the room to unfold. This is not good risk reward because you will agree this is less than 1-to-1 risk reward. So for the educational process of your thinking, this is you just need to understand that this is always the same thing. We have a balanced area, price advertises for the lower or higher region. We see then some time that the time regulates the opportunity here. That means we stay within this area, but then measuring failure of success would mean at the low we want to see the rejection. And this time from a balanced perspective view, this is then the responsive buying. And this is what you want to see then in delta. And if you see then here at the low, the responsive buying, people getting out, then that's a good entry chance. At this moment, you see still the push to the downside. We haven't seen the responsive buying signs yet, but we see ongoing selling. And on the other side, if you see now, when we go here to the low, where we're right now, and you see again increasing selling, then that's the initiative sellers who try to push into the overnight high, means that they may test then with increased selling volume ongoing, but only if then we have a chance that they test this area of low back to the 55, 54 area. And that's what you need to spot. You need to spot at the edges, at the higher volume edges, at the PUC and higher volume edges. At this time, you need to spot responsive behavior or initiative behavior. And if this taken place at the activity levels from the big picture, then you have the very good edge and a very good strategy where you have a higher probability and the basics for making money. So please watch with me the situation now. We're at this micro-balanced area, and please, at the moment I'm talking, see this? See this here? We're at the low. We don't see responsive buying. We haven't seen the double rejection yet that I'm normally looking for. You see this? Rejection number 1 took place here. But then again, the increase of sell volume when we go into the low was taken out the low of the delta structure. That means this now, at this moment, 2 minutes before, this buying candle is not my rejection when I'm looking for. This is a break of the delta structure. And we see now reaching the low. We're now reaching a low, still interested in sellers. That means still initiative sellers at the low of this area. So this means that this doesn't mean that now it have to be a short trade running straight to the 54. And this is still not the way where I'm looking for the short bit, because if you read my hypos, I haven't prepared the short at this level. But it's just a clear sign of not getting going long, as long we don't see that this is calming a little bit down here. That means I want to see pressure stops in the delta, and then I want to see buyers again. And if the delta pressure stops, flatten a little bit, getting at least neutral, and then seeing at the low, again, this behavior at the low, buyers coming in, a green stick, a green candle, or here as bit difference, then that's a reason to buy. But not for me, as I said again, because risk reward here is not good enough. But please see the difference from responsive buying scenario and price and the volume and the initiative selling. See this live now, see it live. See we're at the low and still increase of sell volume. So this is very important. So it is clear to see, I would say very clear to see the difference in behavior between initiative selling here at the low of the range or responsive buying. At a responsive buying scenario, we don't want to see that the pressure of selling continues. You know what I mean? And we can compare this together again with the scenario of our trade number 1 that we trade together. I show you this again so you can compare it by yourself. See this here. When I got in, you see we are at the marked level, the range edge, at the edge of the volume, the high volume, 65. We touched the 66, 65 level here at 9.50. We see in selling here, look at the delta and the stick at the aspect difference, and we see the first rejection here at 9.16. Then I said this was the first rejection. I want to always see a double rejection. So people first got out of the short. This is only the sign of a getting out of the short. This doesn't have to mean there's already the bias. I want to see a second test. This appeared 2 minutes later. Look at here, 9.20. Look at the delta structure. No continuation of the sell pressure. You will agree. This is a delta divergence. You will agree. This is a lower low at this here. This is the second test with less aggressive selling than the first test in means of delta structure. And in the asked bid difference, we see that after the selling stop, responsive buying. 1, 2, 3, 4 times, 5 times. We are in a cheap price area as well, which makes this a beautiful trade to enter. And this is when we entered then, or I entered here at 9:23 and 30 seconds. Double rejection signs. Please now compare it with this scenario where you maybe now got stopped out because you didn't listen or had no emotional clear mindset and said maybe I'm not good enough or not good enough. I'm not advanced enough to spot the difference between initiative sellers or responsive buyers. Look at this scenario. We reaching the low. You will agree that this here definitely from the cash market is our range low. That means we reaching the low of 177.66 the first time at 10 o'clock and 42 minutes. All right? I think you will agree. This is the first time we're touching down these levels. Now see this. First people get out of the short and we have the first rejection. That's okay. That's wonderful. Okay? You see it here in the delta structure, in the delta bars, cumulative delta. You see here, the first people get out of the short. And now the second test of the low. Please compare it to the first situation. Do you see that this pressure is even harder than before? That means they put pressure to the sellers even more. That means we have no delta divergence. We see even more pressure. We see in a lower low than before in this double test. That means this rejection here is not counted for me as a double rejection. This is why I'm not looking when the pressure is ongoing at the low for the entry then. I want to see that it flatten up. So I give it a third chance, of course, because sometimes they stop selling, we flatten down this curve and seeing now responsive buying at the low. But you will agree, this haven't happened. At this moment when we see the lower low and getting up here to the higher areas again, with this I said I don't count as a rejection, and getting then back to the low again, at this moment, what do you see? You will agree that at this moment, at the 10 o'clock 47 and 30 seconds, we're again at the low of this microstructure at the 65. And at the 65, look at the delta. Delta increases sellers. That means more people selling than buying. If more people selling at the low of a microstructure, after not getting rejected, what we want to see a double rejection. I call this, and everybody will agree, initiative selling. That means we have a higher probability that they now about to take out the low, and they did. And you only had to wait 1 minute more, and you see that they took out the low. So for me, again, this wasn't a reason to take on now the short trade because this was not prepared, and I seen not the available. I don't see an available material to get here to the downside, as we see also at the 57 to 56, 60 level, the overnight higher volume edge. That means this could be already a level where people trying to get into the buying again where we see all the buyer starts at the pre-market. So that means this is a little bit blurred and not clear scenario. For me, it would be much cooler if we could take out the 54. This is our second range level, remember, from the morning, second range level from the overnight session. This is where a lot of buying came in at the time to 15 to 30. And this is where we see some absorption. That means there was at least some real interest. This was also at 8 o'clock with the pre-market open, the scenario where we see an access on the downside. That means 54 is protected by bulls. And if we really see that they take 54 out, we have at least a chance to get down to the 55, 53 and 40 level. That means this is okay. This is a good risk reward, but not before. Not before. And you see how weak this short trade is running so far. And you may also will agree, if you have some trading experiences, normally a short should run not as gluish as it is doing right now. And you see already some signs here of rejection. So just stick with your preparation. If you're not sure, if you see that something is not working out, doesn't mean you have to go for the opposite direction. If the long here is not working out, where we're looking for the responsive buyers, doesn't mean that you have look immediately for the short direction. You can look immediately for the short direction, but only if you have prepared a level in the big picture where you say, okay, hey, this is a level where there is some mark of decision making. So then it's absolutely okay. But I will tell you, in this case, not for me. See here in Footprint how they provide already liquidity at this level of interest, and the liquidity of interest is this volume edge at the 60. And you see 60.95, 59.58, they provide liquidity. You also see people taking the profits, and you also see some people coming in and also buying again. So I think this is very clear now here to see that this wasn't the best short opportunity. If they stay in control of the short at this measuring marks, that's everything is possible that they take it out and go to the 54. But just not statistical for me. This was not prepared, and I'm not going for the not prepared trade here. You can also see it here in the 15 minutes chart, excuse me, here, where we started at from the morning. This was the overnight distribution, the higher and the lower edge. High volume edge, you see here this little axis with the 8 o'clock open. We tested the low, exactly this 45 level, 54 level, where I said this is important. So that means this is all bull country. And I don't want to trade here into the 62.1 to the bulls country, as they may already stop with the 57.58 level. So that's why I said it would be much cooler if we go into the 54 level here and taken out this low. Then we have a chance to get to the old distribution from yesterday. So at least reaching the 46 area to 44 or 42, or even get to the yesterday VPOC. So this is much better risk reward for me, no matter if this now is played out or not. So it's 11 o'clock and we already have seen the numbers of the ZEW, the German numbers. This was very important numbers, by the way, the German ZEW economic sentiment. And the forecast was about the 21, 20, and 27 and 21 in European Union. And both numbers, European and German, were very weak, 27 and 21, and reached minus 44 and minus 43, minus 27, minus 21, and they had now actual minus 44, minus 43. So very weak numbers. And of course, this pushes some liquidity, then short-term news traders, into the bond market. So I would say that's it for the moment. That's now our today's session of today's Bund, and thank you for watching. I think it was again very interesting market, a little bit weak, a little bit slow at the beginning. We get some good trade. You also get some very good ticks, maybe I've calculated about 20 ticks with the three contracts with the trade number 1. Let them flow into the trend trade even, so it would be allowed about 20 ticks with your with the first trade. If you trade only single lots, then you have made maybe 0 or up to 1 tick today, because market didn't pay off with the trend play then. But it was very interesting and was very good to read, and we had some nice clear structure, and we can again see one can rely on its hypos if the big preparation using some standards and using this knowledge that gives us volume profile in auction theory. So thank you for watching. This is Anton Apfel for Manapa Trading.